All right, what do you think, Raf? Got about 80 people in now. We've hit the time. Should we get going? All right, thank you. All right, guys. Hey, thanks for showing up. This is awesome. It's been a long time coming. I was talking with Andrew for a while about doing a webinar, and here we are finally. So I titled this Setup plus Execution equals Results. It's kind of the way I like to look at things, and I'm going to try and make sense of it for all you fine people today. So let's get going. Firstly, a disclaimer, nobody here is licensed to tell you what to do with your money. Certainly nobody at Bearable Traders, and even those guys who are licensed, I recommend you be careful with that. So that's kind of what this says. It's your money. Be smart about it. All right. A little bit of background before we get going. This picture is probably the best picture taken of me in the last 38 years. So it has to be up here. So that was actually in Colorado. I was snowboarding. And well, yeah, that's what my hair looks like after snowboarding. Anyways, I was born in Sri Lanka, grew up in Dubai, and then spent most of my adult life in the United States. And about a year ago, moved back to Dubai. So I spent about 20 years out there. And I got a Bachelor of Science from Embry-Riddle, and I was a flight instructor at first. That was my first gig, first step in my career. Then spent a little time in the family business and in the world of digital marketing. None of that stuff's for me. I couldn't figure it out. I didn't like it. And then in about 2017, I got involved in the wild world of contrarian investing, investing in dead beat up sectors and looking for a massive risk to reward kind of plays. In 2019, I came across Andrew's book and figured out that day trading is quite a possibility. So since I read that in September 2019, that's all I've been doing, full-time day trading. I never even looked at anything else. So it's been 4 years, but I have the equivalent of a lot more screen time than most people do at 4 years, just because it's all I did. It's all I've done full-time. So since then, it's just been day trading, contrarian investing, and more recently, I've been a moderator and a mentor in the world of day trading. And when I'm not trying to squeeze a dollar out of the market, I have various hobbies. I enjoy water sports, specifically surfing. I still like to fly airplanes for fun. It's awesome, great fun. We have the desert out here in Dubai. I love to take the Jeep out off-roading, go ride motorcycles, go snowboarding when I get a chance, off from Europe or someplace. Cricket's an odd one that I always get involved in, playing music with the guitar. And I got two kids, so I like spending time with them. And what's neat about this, I know it's a long list of hobbies, but something I'd like to highlight here is that when you get day trading really going for you, it affords you a lot of time freedom and financial freedom. So that's the real reward of it. And I've been able to kind of structure my life around that in the last couple of years. That's the beauty of it. So it's really a powerful thing, and it's worth the effort. It's worth the learning curve. It's worth the painful transitions you have to go through at times. It's definitely worth it. So with that said, let's try to get into a little bit of day trading stuff, eh? So the 80-20 principle is something I'd like to highlight. It's something that I live by. I'm sure lots of people have come across it. Essentially, it says that 80% of your results come from 20% of your efforts. And it works the other way as well. 80% of things can consume your time and energy, but only give you a tiny bit of your results. So when I came across this principle not too long ago, I've really tried to live by this and look at it in so many things. And I find it to be true, and it really is very powerful. Here's another visualization of it. Basically, 20% of your time and energy does result in 80% of your efforts. 80% of your results, whereas a lot of trivial things can consume you and doesn't give you much result. Yeah, Pareto principle. And really, it's so powerful. I have found it to be so powerful. It's the kind of thing that I'd have my kids read about it before they know how to read. It really is amazing. And especially in this crazy world of day trading, there's so much out there. You can get caught up in so much crap that it's important to figure out what is impactful and what is not impactful. And that's really what I'm going to try and share with you here today, and then bring out a lot of examples of how I use it at least. So let's get into a few things. Yeah, this is the book on 80-20 that has had a big impact on my life by Richard Koch. Again, it's the book I have my kids read before they even know how to read the alphabet. So important stuff. I recommend it to everybody. All right, a few examples of how powerful this is, not just in day trading, but really when you kind of figure out the philosophy and apply it to everything, you see it everything. You see it in everything. There's some examples here where 80% of a company's output comes from 20% of its workers. 20% of your knowledge is used 80% of the time. Your wardrobe, 20% of your clothes are usually worn 80% of the time. All this stuff, I have found it to be true. All of these examples out here, and you just kind of look at it. Look at the traffic on the street. 80% of the traffic is usually on 20% of the roads. And it's really amazing. And, once I figured this out, most things that used to consume me and get me all stressed out, they just kind of fizzled away. I found them to be quite trivial and not useful. And so that's amazing. And then when it came to day trading, about four years ago, I figured, let me look for the 80-20 and all this exposure there is out there, all the YouTube stuff, all the books, all the communities, all that stuff. Where's the 80-20 in it? What's the most impactful thing I can do to find success as a day trader? And doing that, I'm here where I am today. I'm going to try and share that with you now. So the 80-20 of day trading, as I've found, first thing really is standing on the shoulders of giants. And what I mean by that is, read Andrew's book. That was the first time I figured out anything about trading. There was a lot of stuff in there. And get into the chat room, join the community. There's so many experienced traders here who've been doing it for years and years, 5 years, 10 years. Brian's been doing these diddly-doodly trades since the dot-com bubble. These guys know what they're doing. They have a lot of experience and expertise. Get in there and interact. Just being in the room itself, when I first started in the simulator in 2019, just being in the room was so insightful. And then trying to interact with everyone was great. And, the webinars that I participated in, everything was just standing on the shoulders of these giants. You really don't need to create anything. You don't need to reinvent the wheel. The market's been here forever. It'll be here for a long time. There are lots of guys in this world who know what they're doing in this business. You just got to get out there and learn from them. That really is so powerful. I find a lot of people, they have a lot of pride and they say, I'm going to figure this out myself. Well, you know what? You're putting in a lot of effort. You may well figure it out, but there's a simpler way to do it. Again, the 80-20 thing, right? Another thing I've found is really your trading style, the one that you find and stick with that is sustainable, it really ought to be a reflection of your personality. And only then it will be sustainable for you. So as an example, there are guys out there who want to trade right at the open, that wild momentum, in and out quick, and they're watching momentum. They're in with momentum. As soon as momentum dies, they start taking partials, they're out of break even, all that sort of thing. And they function at that pace quite naturally. That's kind of like their frequency. And what you have is, you have the other side where there's guys who like to take their time to analyze things, go slow at it, and they'll wait 4 hours before their setup is ready, and then they'll take a trade. But they do that because that's the frequency that they function at. So everyone's a little different. Everyone's got a different personality. Everyone's got different personality traits. A lot of it's to do with what pace you function at. And so whatever it is that you stick with as your trading style should reflect your personality. It takes a bit of discovery, a bit of self-discovery, a bit of working with mentors, a bit of losing money in the markets, a lot of time in the sim, reading some good books. But really, I've found this to be true, and I can tell you I've tried a lot of different styles over the years. At first, like most people, trying to copy Andrew with the 1 minute opening range breakout, losing ridiculous amounts of money just doing that up front, being really stupid, really. But then over time, kind of figuring out what makes sense to me, what resonates with me, And I work with a lot of mentees, and I always try and help them figure out what their pace is and what reflects their personality. Some guys like trading ranges up and down, support and resistance, and they're able to visualize that. Some guys just want to trade breakouts, and they can visualize that a lot easier than ranges. So it's very different for everybody. Again, an 80-20 thing. Your style should reflect your personality. That's what will be sustainable. Another thing is the abundance mindset, and this one drives me absolutely nuts. Okay, by the abundance mindset, what I'm trying to say here really is, in the market, we are here dealing with the financial market. There is an abundance of opportunities. There's actually no logical reason to go chasing a trade. Now, we do it all the time. I did it today even. But there's no logic behind that. Realistically, No matter what your style is, what your setup is, there are 1,000 tickers out there, and each of them are going to give you multiple opportunities in a day. So there is a massive abundance of opportunities, which is quite difficult coming from the rat race where, you fight to get into college and you fight to get a job and you fight to pay off a debt, you fight to pay off the mortgage, you fight to keep a job. All that stuff is scarcity mindset. Yeah, thanks, man. It's a scarcity mindset that that the education system leads us into. But when you come to the market, it took me a while to figure out that really I got to drop this shit. And it's the abundance mindset. Abundance means it's right there in front of me. Take it when I want. That really is another big piece when it comes to 80-20. It's a mindset thing. So you don't end up taking less than perfect setups. Just by knowing that it'll be here. And even if you don't get a setup today, what's the big deal? The market's going to be here tomorrow and the next day and the next day and the next day. In this business, it's such a mindset thing. The abundance mindset is very powerful, I find. Another 80-20 thing. Again, these are all principles which I think are really critical for success in trading. Another thing is limit your risk and unlimit your upside. Scaling in is the way I do it, but limit your risk. That's the first piece of it. I see risk in two ways. There's the amount of dollars you put at risk, your entry price, and the difference between your entry price and your stop loss. And the other side of risk is your setup, the quality of the trade, the quality of the setup. Does it really reflect your personality? Are you confident in the trade book? Are you confident in the setup? Or are you just trying to make back money you lost? Or are you just chasing momentum? That's the quality of the trade. And I find that to actually be a lot more powerful than just the number of dollars you risk. So risk really has that element to it where you're looking for the quality of the trade. And if you can take high quality setups, then you limit your risk. And so if it goes against you, okay, it goes against you this time. But the setup is of a high quality, so it does work in your favor a lot more times than that few times that it didn't work for you. And unlimit your upside. Now, that's another thing. I remember, I think it must have been 3 years ago, we had Norm here with Carlos doing the pre-market show. I remember him saying it once, said he doesn't like to limit his upside by having daily targets. And that kind of stuck with me. And so the way I see that is, daily targets or daily goals tend to limit your upside. But if the market's still running and still going in your favor, why aren't you holding on to your position? We all get out too early, right? We always do it. So I've been trying hard to unlimit that upside. So one thing is holding on to the trade for longer. Let your winners run. That's how you get big winners, by letting them be winners. And the other side of it is scaling in. And I'm going to give you examples of scaling in here in a few minutes. But scaling in, I find it really powerful where you get into a position and you add more as you get more confirmation that the trade is going in your favor. In doing that, as you're getting more confirmation, that allows you to move your stop loss in tighter, which at the same time allows you to add into your position, take a heavier position without really risking more dollars because you've tightened your stop. So that's what I mean by scaling in. I'll try and show you some examples of that today, but I find that to be really powerful. A lot of people kind of get stuck and they think to get bigger, you just got to take bigger trades. You don't. I don't do that. I haven't done that. I find ways to wait for confirmation, look for confirmation, and I'll keep adding into my position as it's beginning its move towards my target. That mindset I have found to be very powerful as far as multiplying your P&L is concerned. It really is something really awesome. The next little point here, manage your risk and profits take care of themselves. This is a tweet Andrew put out not long ago, a few months ago, and I took a screenshot of it, and I've got it right here on my side monitor. I always keep it here. The key point is you got to be a risk manager. It kind of is in line with a few things we already discussed here, but managing your risk is the most important thing here. Once you become a good risk manager, this is the way it is. You set up your rules to manage your risk, to plan your trades and your setups and all that. And they are rules at first, but once you do it often enough, it becomes muscle memory, it becomes instinct, it becomes habit. Once it's at that point, once risk management is instinct, oh boy, watch those profits run. It's going to be awesome. It really is amazing once you got the hardest part as instinct. And that takes a lot of exercise, a lot of practice, a lot of work, doing it over months. And you get good at it, then you're just naturally managing risk. That's all you're doing. And then all you're doing is, like I said, scaling and adding into your positions by waiting for confirmations and tightening your stops. All that becomes instinctive. All of that is risk management. And then all you do is let the profits run. Let it run to your target. And again, I'll try and show you more examples of this. But this is more of a mindset thing where you really got to understand the name of your job, the job description is risk management. Really, really, really awesome. So yeah, risk management with cutting losses. Yeah, that's there. That's what we have stops for, right? SG do us. Stops are for that. Why do we have stops? So it goes against us, we stop out. Always know where your stop is. That's the absolutely important must have it. And the last little tricky point here is I've found that people don't really have trading problems. It's more like life problems that reflect in their trading. Clarity of thought is where I'm leading to here. To put it simply, day trading, what we're trying to do here, it's going to reveal you, absolutely reveal you. You're gonna get emotionally triggered when you're in the market. Even before you take a trade, you might feel anxiety. After you get into your position, you might have fear or greed or heightened levels of anxiety. Your heart rate might start pumping up. So many things are going to happen when you're live. So if you are already not at peak performance before you get into this crazy world of day trading, and it's going to eat you up. You're going to get beat down pretty quick by these emotions. So you don't want that, obviously, because when you get that, you're not going to make good decisions. You're going to get out too early. You're going to take bad trades. You're going to lose money. You're going to go heavy size unnecessarily, all of that stuff. All that crap, you don't want that. You should get that out of the way in the simulator, right? So to be at peak performance, you got to have a good balanced life outside of trading. I can't tell you how often I've seen this within myself and a lot of people who I work with. It's amazing. People have all kinds of problems. They got trouble with mortgages or debts or a spouse or kids or I don't even know, whatever. But if there's something that's really bugging you outside of day trading and it's already putting your stress levels slightly higher than normal rather than being stable and balanced, trading will reveal that as you're in the markets. And then you'll wonder why you were sweating and why you took those trades and all that stuff. So it's far more than just showing up for an hour, trade the open, make a few $1,000s and go away. Really, you got to have a balanced lifestyle. Your routine should include taking care of your health, being with your loved ones, spending time to do the things you like. On the first screen, I showed you a ton of hobbies that I like to do. All of that helps me with balance. I love all that stuff. You got to have balance in your life. You got to be responsible for yourself. We're all adults here. Balance is critical. So that's important there. How did you realize that happened to you? What happened to me, Banu? What happened to me is I was in a very unhealthy marriage. And once I removed myself from that, and that became a piece of my past, no longer a piece of my present, my trading actually exploded. That was one massive catalyst that happened in my trading a couple of years ago. So very, very interesting. That was my own circumstance. But everyone's got their own. And, funny things will happen in the future. Things will be in a mess. You've got to find balance. Again, this is a high-performance kind of sport. You've got to be well-balanced before you show up on game day. Always. That's really, really, really important. So, again, 80-20, the reason I bring up these points here is this stuff will lead to 80% of your results. Everything on the screen right here. That I have found to be true, and I found it to be true with a lot of other people. Because the truth really about day trading is it's all about technical analysis, but technical analysis is not that complicated. It's far simpler technically than being an engineer or being a doctor or these other things that people do. That is technically complicated stuff. And I used to fly airplanes. I still do. I find that more technically complicated than day trading. This is about moving averages, some volume, level 2, candlesticks. It's not that much. It's not really a big deal. But it's that emotional side. It's more the trader than the trading that brings the results or the disaster. It's 80% of all the results you get is from the trader. 20% I find it was more about the technical trading side. So I hope that kind of makes sense to you on this screen. I wanted to put this out there before we get into some of the more technical stuff. Hey, another pilot in the room. Hey, good to meet you. Femertas. Cool, man. Awesome fun. All right, anyone got any questions so far? I know we haven't gotten into the meat of it yet, but everyone clear? Everyone with me so far? Have I lost anybody? We good? All right. Hey, from Boulder. All right. Cool. Keep going. All right, so I'm going to bring up a lot of my trades in the last recent 2 months or so. And as I'm trying to walk you through them, I'm going to try and explain to you the emotional experience of doing these trades and getting through it all, and as well as the technical side of it. So here we go. Microsoft, this was, I think, last week. Um, so the way I trade generally, again, I told you, everyone has their own pace. My pace is I look at the daily chart and the 30-minute chart before the market opens, and I try to plan a trade. I look for setups. And these setups are, these bigger time frames, they set up pretty well. They take a few days to set up. So before the market opens, 5 minutes before, I'm already pretty confident of the setup. And then after the open, I'm just waiting for the price action to go to a place where I think I could take a trade, which I've planned before the market opened. And then if it gives me confirmations on the 1-minute chart, on the tape, on the level 2, then I'll take a position. That's basically all I do. And that works for me. If I open up a bunch of charts, put like 6 stocks on the screen, and here we go for the open, I'll chase everything across the stock market. And I've done that. I've really done that, and I've lost a ridiculous amount of money trying to do that. So this is what I do now. This is my 80-20 of day trading. I just want nice, clean setups on bigger time frames. That's where I get my conviction from. And then when the setup comes, when the 1-minute chart gets to that level, when it bounces off that level, when the tape looks good to me, when the level 2 looks good to me, I'm in the position. So most of my work is really done before the market opens. After the market opens, I'm kind of chilling back, sipping coffee, and trying to click buttons on the keyboard. Really not much more. So this particular one, let's see, we got Microsoft. I was thinking about shorting it from previous day's close towards 373. What made me think that? Well, if you look on the daily chart, on the previous day, it was a great big bullish day. It hit up there, it closed there, and then it closed where it's about 376. And then in the post-market, it hung around that area. In the pre-market, it gapped up, but it lost previous day's close pretty quickly, right in this area. And when it lost it, that got me interested for the short, because this was a big way up, a long way up. It's quite extended from the moving averages. I'm thinking it's got to come back down. So this was an opportunity for the short. What I liked is on the 1-minute chart in the pre-market, you can see this candle. This is a bit of a bad print and all that, but what it's really telling me is that it truly does not want to go above yesterday's close, right there too. So 2 minutes before the open, I got more conviction that this could be a good short. And the move is going to happen from previous day's close down. I was thinking 373. Why was I thinking that? Yeah, because I got a level here. That level was 2 days ago high. So potentially what was resistance could become support. So I was thinking in that area. So market opened and it hung around below VWAP, and I knew it wasn't going to go back up to previous day close to give me that entry, but then I can look for some sort of breakdown in this area. The thing is, it opened close to my target. So I adjusted just slightly in the first couple of minutes. I was looking at the level 2, and I saw there were big orders down here in the 371 area. Remember this? Yeah, this was last week. It was down here. So I was thinking, okay, this level that I was thinking could be the support area, could be a breakout. Sure enough, it became a 5-minute opening range breakdown, and that's what I traded. This is an options trade. I only trade options these days. This is a put option. You go long the put option when you think it's going to go down. So really what I'm doing is I'm trading the stock, but when I hit my hotkeys, I execute on the options. That way I get leverage. So I'm cheating. I'm not really trading options. People think I trade options. I don't. It's more about trying to gain leverage by using options. I try to keep a small account size so I can move my other cash towards investments and other things. So don't have to maintain a large day trading account. Options allows me to do that. That's what I do. So this is a short position on Microsoft. So right about here, now I'm looking at this chart. I hit the position, hit the hotkey to enter long on the put option, and it goes and I start covering. And I tried to add here, where was that? That was about here. So open another breakdown, but didn't want to go right away, and that's me getting stopped out at break even. So pretty straightforward trade. If you really look at it and isolate it, it's really nothing more than a 5-minute opening range breakdown, the kind of thing Carlos would trade or Andrew would trade any other day. But I was just looking at a breakdown, a pure 1-minute chart trade. I don't have conviction on the trade, and I'm likely to, make a mess of it. My conviction comes from here. But once the opening bell rings, I'm only looking here. I'm not looking here anymore on this side of the screen. So what's the question? Typical expiration, how far out of the money? Yeah, so expiration, I just go with the earliest expiration every Friday. And out of the money, well, what I do is when I pick a strike price on the options, I just pick my target. So I had reevaluated my target. It was 373. And then I reevaluated to figure the target's down here in the 370 area. So this is a 370 put option. That's it. I don't really do much else with options. You can talk to Jared and Artie and all of them. They can tell you about the Greeks and strategies and these various insects and butterflies and straddles and stuff. I don't know any of that stuff. Hardly I do it. Stop loss and options. Yeah, good question. So like I said, what I do with trading is I really trade the stock. So if it goes to where I'm supposed to stop out on the stock trade, that's where I'll stop out on the options trade. Doesn't matter what the chart's. I'm really not even looking at this chart, at the options chart. I'm looking here. And it's a mental stop. Yeah, if it goes back into this range where it's no longer a 5-minute opening range breakdown, now it's just a false breakdown, I'm out of it. If it went back up in here, I'm out. So if you look at this chart, the stop loss would have been perhaps halfway of this white candle where I entered. So risk to reward, it was about, 3-to-1 or so. I tried to add as well. That didn't happen. So that's kind of how it's very much mental. Hotkeys, yeah, sure, I can share them. No big deal. Towards the end, I'll pull that up. I've got my DOS closed at the moment, but I'll pull that up. Remind me again, and I'll bring that up. No problem at all. Yeah, options on DOS. This is all on DOS. I don't even know how to use any other platform. I have no experience with any other platform. It's all DOS. And again, I'm not trading options in the traditional sense. Everyone says I'm trading options. That's total crap. I'm trading the stock. I'm expressing my view via options by going long either a put or a call. That's it. it's very simple. What questions do we have here? What was the size here on the option? I have a hotkey where it gets me 50 contracts at a time. So that's how I manage my size. It's just a hotkey on contracts. There's no fixed risk or anything like that. And do you trade fixed risk dollars? No, I don't fix risk. Yeah, Andrew, no. It's variable risk. I'll get more and more into that as we get here because there's going to be a bit more insight. So that's that first one. Apple, the idea here is to go long from VWAP towards 190. VWAP is an interesting one, right? Because that fluctuates, isn't it? So anyways, the trade here on this one, what was going on? Apple was making a big run up, and I don't have yesterday's action, but all right. You can see that it closed here. It was holding here post-market. It went up, came back down, and again, what was interesting pre-market, it really was holding yesterday's close. Now, yesterday's close is a critical area in day trading. That's just my view. That's something I learned from Jared a couple of years ago. He put out a webinar on that. Amazing. I just use that all the time. So holding yesterday's close, and for about an hour and a half before the open, it's really strong. Okay, so this thing wants to go up. All right, we can see that's pretty obvious, and that's in line with everything on the daily. So I got 2 time frames here nicely aligned. Everything wants to go up. So I'm thinking, we're getting close to the open. We're in this area. I'm like, okay, I want to take this long. The VWAP's down here. All right, at this point, I'm like, okay, long from VWAP. So if it comes down here and it goes. But realistically, we know wherever it opens, the VWAP's going to go there. And then it wants to go up. And that always happens because the opening volume is always going to drag the VWAP to it. It's a volume-weighted average price. So, I'm sorry, just doing a question. What's up here? You got same thing, yeah. One expiration, I use the earliest expiration every Friday. This week I use Friday's expiration. So every Friday. So back to this. You got alignment on 2 time frames. I want a long. I'm looking for a good entry. I don't know that after it opens, it's going to come down somewhere in this 189 area or somewhere down to 188 and give me a good entry. So I'm thinking, okay, I'm waiting for a setup on the 1 minute for a long. Basically, that's VWAP. That could be a 1 minute opening range breakout. In this case, it did a 5 minute, or you could call it a 10 minute opening range breakout. So right in here, it was strong as expected, right? You could have taken a 1 minute opening range breakout off the VWAP. I wasn't quick enough for that. But then it did this beautiful consolidation. Remember, I'm going long, and I'm thinking 190 as a target, right? It's already there. See, 190. But while it's doing this, I'm watching the level 2, and I'm seeing orders building up at 191 and 192. It's just stacking up as the price is just sitting up here above VWAP. So just wait there. I'm confident it's not losing VWAP. Every time it hits VWAP, it gets bought up. It gets bought up. So every time it hits VWAP, I'm just taking more position, just more contracts, as it gives me confirmation that it's a quality trade. By quality, I mean it's going to stay long above VWAP. That's the entry criteria on my trade, right? So I'm just doing that, and sure enough, it pops. And it's still, by the way, it still has those orders at 191 and 192. It tells me the Price wants to go there. So when it pops, whoop, where you go, sorry. So when it pops, then I'm looking at how is it going? Is it popping, getting extended from the moving averages, or is it just kind of trending, holding moving averages up? In this case, it was a whole lot of buying and a lot of momentum, a lot of volume, popped up quickly. I'm like, oh crap, I better start getting out because this thing, if it pops that quick, it could come down that quick too. And all those orders at 191 could be irrelevant. So that's me getting afraid and getting out. Turns out I built up quite a large position, so it worked out to be a decent trade. And I think I got out about 70 or 80% of my position before I stopped out over here. So yeah, volume is critical. I pay attention to volume. You can see the volume the first couple of minutes very strong, and consolidation volume very weak. So it tells me, listen, it's strong. It's just holding its breath before it goes again, or catching its breath before it goes again. What do we have here? Consolidation, yeah. You can lean on VWAP support area, tighten your stop. Yep, that's it, coil snake, exactly. And this is something I've learned from the investing world as well. The longer it stays, the longer and tighter the consolidation, the more explosive the breakout when it happens. So I have that kind of philosophy in my head, and sure enough, this one popped. It really freaking popped. It wanted to rip. I think it did go back up to 191, 192 on this day, but it came back down, tested the opening price, and it did all that. But by this point, I'm done with my day, and this is about 15, 20 minutes of work. Again, another piece of 80-20 here, time freedom. You don't have to sit here and wait for another 2 hours till it goes up to 191. I got the move from 190 to about 190.5. I'm good. If it does another 50 cents, was it worth my time to sit here for 2 more hours, 3 more hours? No way, man. I got 2 kids to play with. I'm going to go make Legos and stuff. No way. So, yeah, Anna Cooling's book, really a good one. All this volume stuff, Thor brought it out, and I learned a lot of it from him and Anna Cooling's book. Really, really good stuff. So there you go. That's the idea on this trade. So this is where I was talking about scaling in with confirmation. I mentioned that in the earlier slide. This is where you can really have a good pop in your P&L. If I had just taken one position and taken the trade, it would have been a green trade. But the P&L worked out to be a lot bigger just because of the ads and scaling in. But there is a trick to scaling in. It is you got to wait for confirmations, high quality trades, because that's another piece of 80-20, right? The trade got to be of high quality. And to me, the high quality really comes from this side of the screen, the longer term time frames. I like to do that. I like to take my time and analyze it for 30 minutes before the market opens. But then I don't want to hang around for 2 hours after the market opens. So I take my position based on my bigger time frame analysis. Usually it's at the open. Within about half hour on most days, I'm done trading. So that's basically it. So every time you scale in or cover is 50. No, I scale in 50 contracts. I cover by percentage of my position size. I have a 25% hotkey that scales me out at 25%, and another one that gets me all out. Why not trade the stock itself? Yeah, good question. Leverage is a big deal. For me, I want to be efficient with my cash. I don't want to have a few $100,000 sitting in my account overnight. It doesn't make sense to me. I'd rather put that into an investment account for my kids and all that stuff. So I do that. So I try to maintain as small as possible day trading account, which is also good because if I end up being really stupid on some day, if I blow up that account, I haven't blown up my life. Yeah, that's one little piece of it. That's not really an issue anymore these days, but really efficient use of cash. That's it. That's why options. And the way I do it, like I said, is I plan my trades before the market opens. So I can already open up the options chain and put up the options chart on my screen before the market opens, 5 minutes before it opens. I don't have to watch the action, then look for that option chart. By the time I get it on, it's late. It's gone. The trade's already gone. So that's kind of what I do. Yeah, 10K account, Andrew. You don't really need a lot. You really don't. Most of these trades, like this one, I don't know. I probably must have put in about $20,000, 25 maybe, to get this position and got a $4,000 trade out of it. So not a big deal. Yeah, how much did it cost? Yeah, I'd say 25,000 on this position, this Apple position map, probably around there. Most of my trades are in that range. All right, another one. Tesla. What happened here? Yes, I don't think I took this one, but this was interesting. Oh yeah, I remember this day. This was last week when everything just wanted to go up, right? Remember that? Okay, so the idea was to go long 233 towards 240. And where the hell's 233? Yeah, down here. All right, so this was fun. It gapped up, but really it didn't just pop up. It closed at the top of where it consolidated, probably a week ago. And then post-market and pre-market, nice pattern. It was really trading well until about, 9 o'clock? Some news came out. Was it jobless numbers or whatever it was? And then it made the move up. And I think the whole tech sector did this on that day. And now I'm thinking, holy crap, this thing's already moved. Does it want to go up? Does it want to go down? What the hell? I'm thinking it's strong. It wants to go up. Let me find a good entry. A retracement, go up. Well, that was kind of shallow of me, to be honest. Because really, check this out. It made this move, but for the last 30 minutes before the open, it did this. Any idea what this is called? Anybody? Come on, we see this every day. Yeah, Jeff, 0DT always works as well. I can do that on Fridays. Yeah, Scotty, that's a double top. Straight up and simple, double top. So here's the trade. This thing already did its business. The big players did their business early in the morning. They're done. Now it's sitting here and it's giving you a very clear double top. At the open, just short the shit out of this, man. That's the trade. That's it. I was so silly not to do that. I had the idea to go long, and well, thankfully I didn't take the trade going long. I don't know what this was. Probably hotkey error. But I don't trade stocks, so this was an error. And really, the fun thing here is the confirmation of the double top is the middle area right here. So there's the top, that's the centerpiece. Once it loses that center, that's your short, which is basically here right below opening price. Your stop loss could be above opening price. You can plan this trade before the open. Go along a put option down here, 233, 232. There, that's the area. So I made a mess of this one. I made a plan, and my plan was flawed. The setup was flawed on this one. So I didn't execute a trade on this. As it turns out, I realized later, oh, that was crap. So that's that. What questions do we have here? Account size. Where do you get more return on cash than trading? The way I do value investing, I do that. Get a lot of return. My targets are usually 5-1 in the investing world, but those are 5 and 6 year, 8 year kind of investment holds. It's a different mindset altogether. I can share that with you. Email me. I'm happy to share that stuff with you. No problem at all. Do you trade 0DT? Yeah, 0 on Fridays. I'll trade the expiration on that day itself. I'm going long. I'm always going long options. I never short options. When I'm trading this stuff, I'm either long or put. If I want to go long, in this case on Tesla, I should have gone long or put. If I want to go long, it's long or call option. Sorry. Why does it fall after a double top? That's a good question. I don't really know. I know that the setup works. I know it works with volume. I know it works after an aggressive run up, makes a double top. That's when it wants to go down. There's a lot of psychology, market psychology. It runs up. People try to take profits. It traps more bulls. I mean, there's a lot of theories and all that mass psychology stuff. There's a lot of other guys who can answer that question a lot better than I can. But I try not to indulge myself in that because, again, it's just a lot of trivial work in my view. Again, 80-20 stuff. I got to figure out what works. I got to make money out of it. I don't want to spend too much time doing it. And that's it. That's all I want to do. So I don't get too caught up in trivial stuff or things that I find don't have a massive impact on the quality of my trading. At least that's my approach. Yes, Banu, I only trade the top 6-7 tech stocks just because I do only options and they have decent option chains. That's it. I don't really look at anything else. Generally, I don't like it when there's a catalyst because then it pops, it gaps, and the patterns on the bigger time frames are broken. So anything with a catalyst, I'm very skeptical about it. I don't really trade it. NVIDIA, Tesla, AMD, all these guys, they give you plenty of options every day, plenty of opportunities every day. So why the hell do you want to mess around? No big deal. You don't need to. Options, Greeks, nope. Not at all. I have no idea about them. I've read about them, but I don't take advantage of them. Consider DOS Pro more appropriate. I don't even know what DOS Pro is, but I've never used Thinkorswim. I use DOS. That's all I've ever used. So far, so good. Yeah, Gary, no, I don't look at Greeks. Helen, ATR. Oh, boy, don't even start me on ATR. Eamon talks about that a lot. And when I first started in trading, I was looking at Eamon a lot and learning from him a hell of a lot. He talks about ATR all the time. I can't figure it out. It's just too complicated for me. I don't know why. I'm always wrong about it. I'm always wrong. So yeah, Reza, level 2. That's what I use. Level 2 is where I get my targets from most of the time. And I like big orders on level 2 to align with some sort of horizontal level on a bigger time frame, like the daily or the 30, as well as usually you'll find them at big round numbers. Like in this case on Tesla on the screen, maybe 240 had a big order on level 2. And 240 is a big round number. And if you go back on the chart, maybe that was previous support or resistance on a daily or a weekly chart. So I like that. Yes, Q&A. It does turn into Q&A. Well, I guess that's the way I like it anyway. All right, how long I've been trading? Vishal, I've been since 2019. It's been full-time profitable. I'd say about a year and a half, 2 years, consistently profitable. Yeah. All right, next one. Oh boy, this day was wild. I don't know why I put this on here. This is embarrassing. All right, let's give it a go. The Tesla idea on this day was to go short from the 250.5 area towards the previous day's close. So 250.5, about there, down. What's interesting is this, it gapped up, that was the previous chart, and it's about to hit this big moving average on the daily chart. I think this is the 50 moving average. My idea is it's going to hit that moving average and probably reject and come down. So if it does that, I want to short this thing. So as it goes on the 30-minute chart, sure enough, it's looking strong, but before the open, look at that. It dropped, and it dropped that moving average. And I marked the moving average here, 240.64. That's what I marked on my chart, 240.64. So that's my level. I want to short from there. That's important to me. And in the pre-market last 30 minutes, you can see it makes a wick. It gets up there and rejects again. So I'm thinking, oh boy, I like this one for a short. So the next screen, I've got the 1 minute. Yeah, there we go. Is this the same chart? I think it is. Yeah, 240.64. So that's the idea. Now it opened below the area where it rejected from. That was on the 30-minute chart where it rejected the big moving average on the daily. Went down. My idea was to go down to previous day close, which is here. But look at it. Where it opened and where it wants to go to the target, there's not enough of a trade there. There just isn't enough. But me being aggressive, well, that's me trying to go short. Now trying to break down from the previous day close. Sure enough, got stopped out a couple of times. Not smart trading, really. I think this may have been up here. Whatever it was, the trade was no longer valid because my idea was to short here down to here. It was already halfway in the move. It was too quick for me. I was not going to get this trade. The move happened in the first 2 minutes, and it came back up here, back to the moving average. And I think I'm going to short it again here. I think, yeah, that's where this was. Trying to short, and look at this. Getting into a position, adding more in, averaging down, doing everything that's wrong. Absolutely everything. That's why this was something like a $5,000 or $6,000 loss right up front. Ridiculous. This is just not the way to trade. So that was all wrong. But about 10 o'clock, I think I got my head finally screwed on right and started reanalyzing it. So I have my trading plan before the market opens. If it happens, great. If it doesn't happen, I don't have a trade. But then after this opening volatility and all of this garbage is out of the way, then I have the ability to actually sit down and analyze it with a clear head. Because as this stuff is happening with big volume, I don't have the ability to analyze bigger time frames. I just get excited. I don't know. I guess I have an aggressive streak in my personality where I want it and I want it now. And if it's going now, I want it now. And I've made that mistake in the past. Just put a bunch of stocks on the screen, 1 minute chart, and go chase it. Not smart. So this was done good. Now I'm going to go back real quick to the 30 minutes. So this is the action I showed you just now. That was the candle that I made in those 30 minutes. And look what it's set up right here. Any ideas what the setup is? Went down, came back up, 30-minute hammer. What does it look like it could do next? Any ideas? Yeah. Yeah, Andrew, 1 minute chart's real noisy. 5 minutes better, for sure. Pin bar, I don't even know what a pin bar is, Aaron. Well, 30-minute opening range breakout. Now tell me, how's that different from a 1 minute? I don't see a difference, to be honest. I really don't. 30 minutes was this range right here. This is the top of the candle. This is the close of the candle. This is the top of the candle. It made a wick. Higher highs. Really interesting. On the 5 minute, you'll be able to see this. So yeah, Andrew, higher highs. This will look like a double bottom even on a 5 minute chart. Previous day's close, as I told you, very interesting level for intraday trading. Then it bounced off of previous day's high. So it's giving you proof. Hey, look at this. Look at me. I'm going up. I'm going up. That's what it's telling you for the first 30 minutes. And sure enough, once it claims the big moving average, which was a troublesome area just previously, and it did that with volume, and then it's holding above that, now I'm excited for a long. I'm interested. And that's, where is that? That's about here. It's about in this area where I'm excited to get involved for a long. So I'm going long here. I'm adding to my position after I see this hammer. And this level, don't forget, the big pink line is the big moving average on the daily chart. So this was already my level of interest from before the market even opened. Sure enough, with everything that's going on in this area, it's telling me I want to go up. In addition to this, I don't have a screenshot of it, but I remember on this day, 243, 245, and I think 246. I had big orders on the level 2, and they were just building up as this action was going on. So as this was going on, I'm just waiting to get into heavier and heavier and heavier positions. Sure enough, heavy position, got out over here, came back into the moving averages, bounced out, broke out here. I added more. That's, I think, right over here perhaps, and took the ride up. And that's it. That's it. But this was possible because I finally got my head screwed on right. I was just excited and being real numbnuts about it in this area. And look at that. While I was going short here, I was going long at the same time. I was getting stopped out short, and I'm going long. That's this. That's this. Right here. Up and down, up and down, up and down. This is just, you got to do this in the simulator in your first 6 months. Get this garbage out of the way. That's why I said this is embarrassing that I even put this out here. But, you know, we're all susceptible to emotions, and it's so critical to have a stop loss. I was really weak here with entering positions, but what saved my ass was stop losses. I have an instinct of just stopping out when I don't like it. You know, when I don't like it, it actually comes from my rules. But stop out as soon as it doesn't work, as soon as it's not in your favor, as soon as it no longer validates your trade idea. Stop out. So this could have easily been a massive, massive, massive loss right in this area. But thankfully, it wasn't that bad, and I managed to get into a position and made a green day out of it. So there's an example of a rough day in the markets. But it's not because of the markets. It's because, and it's not even because of the technical or a lack of technical understanding. It's because of the trader, the human being. That's why I said you got to have a trade book that reflects your personality. You got to have clarity of thought. You got to be on your game. You really got to have a balanced life. You really got to be a balanced, emotionally balanced person if you want to be able to do this shit. Because it really is tough stuff to do, man, emotionally. So let's see, what questions have we got here? Yeah, thanks, Raf. Max contracts you take per trade, Manu? It depends. I don't know. See, on this one, $3, $4, you know, I could take maybe 300 contracts, 200. On something that's 50 cents a contract, I could take a lot more, 500, 600 contracts. I've done that in the past. So it depends. You really got to calculate that stuff. How do you come up with a watch list, the levels? Well, my watch list is just those 5 or 6 big tech stocks. And the levels are on the bigger time frames. I look at the daily and the 30. And again, I'm going to try and show you more and more examples here of how I try and identify levels. Thanks for sharing losses. Yeah, sure, man. No problem. And track your win rate. No, my win rate, Andrew, recently, it's probably 30, 40%. I haven't even looked at it. But there's the trick, right? What I mentioned earlier in the webinar is you unlimit your upside. Unlimit your upside by scaling in. So when I do stop out, it's rare that I stop out like this after scaling in. When I do stop out, it's more like this. One entry and I'm out before it works out. And when I get trades that are working in my favor, I keep getting into them heavier and heavier, like this stuff right here. And so this winner turns out to be absolutely massive, and it outweighs maybe 6 or 7 bad trades. So that's why with a 30, 40% win rate, you can still make it work. Now, this suits me. It's not for everybody. That's why you got to figure out what works for you. If you can't stomach taking 5 losses and still be cool about it, well, then that's not your trading style. It's not for you. It's not suitable with your personality. It's a misalignment, and you'll end up in trouble. So that alignment with your personality and your stomach for risk, that counts, man. That's incredibly important stuff. That's 80-20 stuff right there. So hope that helps. Omar, my 5 stocks are, what do we have? We have Tesla, NVIDIA, AMD, Microsoft, Meta. Apple's there. Yeah, Apple as well. So that's 6. I've tossed Google because Google doesn't have decent options. I just tossed it last week. So I don't look at that one anymore. Andrew, I don't know if I trade like Paras. That guy's just a superstar, man. Like I gotta learn more from him. There's a lot going on with what he does. It's amazing. All right, next one. The idea here on Tesla. Yeah, Pravet, as you are. Long from PDC to 212, 215. Why the hell would I do that? Interesting. Look at this. The daily chart got me excited. This was a consolidation in my eyes, these 4 candles. Then on this day, it broke down from that consolidation. Okay, and it did that with volume. So it's convincing me that this is a genuine breakdown. It's likely to continue its move. But most times when you have a range and it breaks out, it likes to retest the range. So I'm thinking from where it closed, on this day, it wants to go back up to the range, which is about here, the bottom of these candles. Let's see, this pink line, 215. Wherever it is, it probably wants to go up to 215 before it continues its run down. So I'm trying to trade just to move up to where it retests the range that it just broke out of. That's my idea, just looking at the daily chart, just the daily. Going over to the 30, look at that, broke down. That's the breakdown, big candle, this big day. And again, what do we see here on the 30-minute chart? Any ideas, anybody? Change contract. Yeah, Nathan, I do change contracts. That's like 30 minutes after the open. Yeah, that's right. You guys all got it. It's a double bottom. So look at this alignment. I'm thinking long from the daily chart. Then I'm thinking long from the 30-minute chart because of the double bottom. So, all right, fantastic. Look at that alignment. It just works. So what I'm looking at is, again, previous day's close. Before the open, it's smashing its head up against previous day's close, hanging out in the area, not proving to me that it wants to break out. But it's setting up for a breakout on the 30. It's a bit of a triangle, a wedge pattern after the double bottom, after this breakout. So, I mean, everything's aligning. I'm getting really excited 5 minutes before the open. I'm like, holy crap, this is going to be too much. I better, step away. See, everything was aligning. So as the open happens, now I'm ready to go long here, and I'm looking at the 215 as an ultimate target, but I see 212 on the level 2 before the market opens. I see a big order sitting there. So I'm like, all right, PDC about 210 up to 212. That's a $2 move. That's my first target. And if I'm lucky, 215. So what happens at the open? Now, before the open, again, I get ready with the contracts. This one is what I picked, 212.5. Why? Because 212 is my target. 212.5 was the nearest one. That's it. I didn't really look at the option chain a whole lot more. So it comes down, loses the previous day's close, and I'm thinking, oh, holy crap, I was wrong. This is going to be short. But sure enough, bounced here, goes back up. I get in right about here as it looks strong above yesterday's close. That's me getting in. It pops real quick, and when it pops, here's another interesting thing. At the open, I don't care what your freaking style is or your trade book is. At the open, you're dealing with momentum. If you got a position at the open, you have to consider opening momentum. It's just what stocks do. So what happened here? It popped real quick with lots of momentum. It didn't wait for the moving averages to catch up to it or do any of that stuff. It didn't consolidate. It just went. And as it went, I'm like, okay, cool, I'm in the green because I just got in. Like 60 seconds later, it's up here and it's stalling. It moved quick and then it stopped. It's just sitting there kind of hanging in the air with no support, no nothing. And I'm like, oh, crap, this thing could easily come back and stop out or even go against me. So that's me getting about 80% of my position out. Just from here up to here, 80%, and the rest is at break even, out. That's dealing with momentum. Now, I didn't trade my plan. My plan was to go up to 212, but I could see that it was not ready. It just wasn't ready to go because it did this pop and it stopped. It stopped right here, hanging out in midair. So done. I had to get out of that one. Break even. And I'm glad I did because look what happened. It went against me. Look at that. Boom. Would have been in like a $3,000 loss if I held it all the way down here. Something crazy. So let's see. A couple of questions here. What's your profit taking plan? Certain R's? No, Andrew. I just have targets on the chart. No R's. I don't really look at R's. Yes, this was called. This was 212.5 calls. 30-minute time frame, SK, it makes sense to me. That's it. It just makes sense. What makes sense to me about 30-minute is it's a large time frame. So the larger the time frame, the larger the move you can target. I like that. But it's also not too large that it's unreasonable for intraday trading. I find the 60-minute a little unreasonable. It's more for like swing trading, holding overnight, looking for entries, all that stuff. 30-minute, not as big as you can go for intraday trading, at least the way I see things. Jeff, thoughts on using Bookmap? You know what I don't like about Bookmap? I downloaded it, I paid for it, did it all, I turned it on, and it crashed my whole computer. So I deleted it. That's it. That's my thoughts on Bookmap. But it looks cool, huh? I just got to upgrade my computer in. I'll probably try it out. I'm sure I'll try it out. It looks fun. It looks like a lot of fun. So anyways, this is the execution side. What I said earlier, setup plus execution. So setup is here, execution is here on the 1 minute. The execution side, tight risk management, which is the opening momentum, or rather momentum at the open showed me that it's done going up, so I'm out 80% of it. The rest at break even. That's it. That's risk management right there, execution stuff. Then look at what it did. We have this here and this here, which is a replica of this here and this here. What do we call that? That's another double bottom. It did this. On a 5-minute, you'll see this quite easily. Sure enough, it came back up, double bottom, reclaimed previous day's close, which is the level I was looking to trade anyway. Did this beautiful little hammer. At the end of this hammer confirmed to me, closed above it, then it tested it, came back up. At the end of this hammer, I'm long, right at the beginning of this candle, which is this right here. And sure enough, as I got long, boom, it hit 212, which was my target. That's right here. And then, like I said, if I'm lucky, it gets up to 215. Well, it didn't. But as it went up, it was slowing down in momentum. It really was. It was just kind of weak. It's throwing wicks all over the place. There were orders coming and going on the level 2. And that's me getting out nice and steady because it looks dicey. And look how far extended it is from all the moving averages and everything. This is Tesla, right? It likes to pop and go. And once it pops, you ought to get out of it, man. This is Tesla. Okay? So that's me getting out. And the rest of it was here. I'm like, you know what? I'm done. I got kids. I want to go do something else. I want to go surfing the next day. By this point, it's like 9 p.m. already. I'm done. So that's it. That's the trade. And it worked out to be a decent day. So that's how that works for me. I go, what's this? Stop the low of the hammer body. Is that how? This one, yeah, the body, if I'm not mistaken. Let me look. Came up with volume. I would have been reading something on the level 2 as well there, or on the tape, sorry. But yeah, usually this one, it makes sense. I'm entering right at the bottom of this candle. The stop is the bottom of this candle. So it's pretty tight. So as it gets to my target, it's a 3-to-1 already. Lucky boy that you have all day to play before. Well, Ralph, I don't know if that's good or not because I spend half my day sleeping on the beach from like 9 a.m. to lunch. By that point, I don't want to trade. I want to chill out more, you know. So it's nice. The market opens at 6:30 in the evening here, daylight savings and all. But anyway, so this is an idea of, well, this is how I trade. This is a very typical trade for me. I take this kind of trade on most days. I want alignment on 2 big time frames that I get my conviction from, such that even if I stop out once or twice, I can re-enter if it resets up again. And then, you know, because of that conviction, I can get into the trades and I can get in heavier with confirmation. And really on this one, I didn't get any opportunity to add in. I wanted to. But look at this. It's going up here. I'm not going to add up here, man. No way. If it's hung out at 212 right here and then moving averages caught up to it, then it made a small hammer, bounced off the moving average, then I'd probably double my size for the move up to 215. This would have been like a 20 grand day. But it wasn't to be, not on this day. And those big 20 grand days come once in a month, maybe once in 2 months sometimes. So at least, you know, if this is the way I do it, because conviction is important to me. You got to have conviction on your trade. If you don't have conviction, what will happen is you will be overcome by your emotions, anxiety, fear, greed, fear of losing, fear of not making as much as the other guys in the chat room, all that stuff. That complete crap, really complete crap. Really, that is the 80% of it. 80% of your results come from you, the trader, and 20% is the trading. All this technical stuff I'm showing you really is, I don't think it's complicated. It's a couple of lines on a chart, a little bit of moving average stuff, a little bit of volume. There's really nothing going on with options. So that's really all it is. It's not the technical stuff. It's the emotional intelligence side of things that allows you to take on this kind of trade. When I started, I was risking $50 per trade, and that was pretty big for me, but that was 4 years ago. So in 4 years now, I risk anywhere from 500 to 2 grand, sometimes 3 grand on a trade. So that's variable risk, but I've grown into that. And that's a lot of like freaking beating myself up and growing emotionally. So that's been a lot of the work I've done in trading has been off screen. You can't even see what I'm doing. It's a lot of meditation, a lot of exercise, a lot of workout, a lot of surrounding myself with the kind of people who I'd like to embody, a lot of that stuff. So again, like I said, a lot of your results come from the trader, not so much the trading, the technical side of things. How did you build emotional intelligence, patience? Yeah, all of that stuff, Andrew. I have a good point at the end of this webinar, which I'm secretly saving for you, for all of you. But there's a lot to do with the influences you keep in your life, the people you surround yourself with. You end up becoming like them. There's a big saying about that. I find it to be true. You got to do that. I find weightlifting, going to the gym, that's really important because that it really forces you to push your comfort zone. Even when you're unhappy, you still stick to your plan. That's the discipline side of it. I really use that as discipline. You don't have to go weightlifting, but do something active that'll work. swimming, running, whatever you like. That it also has obvious benefits to your head and make you think straight and your physical health, but it pushes you to stay disciplined. I like that aspect of it. That's training for trading. That's what I see it as when I go to the gym every single day. I'm just training all the time for trading. Raf, yeah, it's not day trading. Well, in a funny way, it's really not. Explain the 212 option. How do you open or add that to DOS? Helen, yeah, you know what I'll do? My DOS is closed right now. At the end of this, I'll open up DOS and pop it up right here on the screen at the end of this presentation and pull it up and show you guys how I pull up the option chains and all that stuff. No problem at all. Cool. Shall we move on for now? I think I have another 20 trades to share with you. Microsoft. Oh my God. What did I do here? What was the idea? Short this thing towards 360. That would have been 262 towards 360. Oh man, I got the typo here. Short from 362.5 to 360. That was the idea. Why the hell would you want to short this? Look at this, just strong, right? All day. Well, let's see. What did it do? Big run up. And over here, it stalled. And it stalled, making a bearish engulfing. Basically, a very big bearish pattern. It's not really bearish. You could say it's, what do you call it? It's stalling. The momentum stalled. The momentum of this last 1 week or so of going up, it stalled. And so now we don't know if it wants to continue up or down, but all we know is that what happened here has stopped happening. So I'm interested in a short. I'm definitely not interested in a long. I'm thinking, if it sets up, maybe it's a short. Let's see. And so this was it. It did this run up, and on this red day, this is what it did. Down, up, down, pretty solid red day. I'm interested in the post-market. It loses the previous day close, hangs around here below it, and I'm thinking, wow, it's down here, but then it's strong after, for the last hour and a half before the market opens. But here's the mistake I made. I looked at the daily chart and I'm thinking, this can't be a long. That's the idea. And so I'm thinking, it's going to be a short. It's going to be a short. It's going to be short. You see how I'm kind of fooling myself here? I looked at this purely thinking the long is done. So it's got to be short. I'm kind of looking for confirmation bias here. I'm looking for a short. So I came up with this crazy idea. I'm going to short it from here down to here. And sure enough, you know what I missed out on? Anybody see anything on the 30-minute chart that I missed out on? Yeah, you see an ABCD. There you go, Scotty. That's on the daily. Yeah, I missed that too. Thanks for sharing that. Anybody see what I missed on the 30-minute chart? Any ideas? Double bottom. Yeah, there you go, Taha. I missed that because of confirmation bias. And I was out there looking for something, trying to create it out of thin air, just fizzled. So a bunch of crap. And sure enough, what did I do? Look at me, trying to short over here. That's a put contract. And I risked $700 on that trade. I'm out. Good news is I tried to short it. I shorted it here. Think about here where I thought it would be short. Good news is I stopped out. Again, that's my instinct. It didn't work. I stopped out as per my trading instinct now. Again, it used to be rules. When you practice enough, rules become instinct. And that's when you can really elevate your trading. So stopping out for me is a real instinct. Even if my setup isn't good, even if my execution on entering isn't good, I have another redundancy in my trading, which is stopping out precisely where I want to. It's days where I fail on all three redundancies that I have those blow-up days where I lose $10,000 in a day. So it's important that you understand your trade book, why everything is in place, why you have those elements there, what saves you from blowing up, and what allows you to unlimit your upside. That's the way I've structured it, and that too to suit my personality. So I hope that kind of makes sense for you guys. That's kind of the blueprint of setting up your trade book, or what I like to say is revealing your trade book. It's in you. You just got to reveal it. You got to find it. It's not something external that you got to go and grab and put stuff together and create something. You don't really have to do it. It's in you. It's about your personality. You got to reveal it. And the trading should reflect your personality. So this was wrong, but it didn't blow me up. No big deal. There you go. Still was a green day. Look at that. And here, NVIDIA. What do we have here? The idea was to go long, 472 to 480. 472 up in this area, 480. Why? First thing, daily chart, looking strong. Closed up here. Getting interested, getting into an area of possible resistance. So that's the close on the previous day. And before the market opened in the pre-market, gapped up above previous day's close. That gives me an indication that it wants to go up. What I really liked is that it tested previous day's close before the market opened at about 7 o'clock. Sure enough, claimed yesterday's high as well in the pre-market, retested it. That's the 8 o'clock candle. And it's strong, very strong. Okay, so everything's adding up. Everything's just in alignment here, long and long. Now I'm thinking, where can I get a trade going long? What makes sense? I found this 272 level, 472 level. And the thing about it was, I picked it because look at this 30-minute action. I don't have it on the 1 minute, but basically what it did was it hit here, it's hung around here, and then it was a breakout. Lots of volume down here. On the 1 minute chart, you could identify that. I wish I had a better screenshot of this. I don't. This would have been 2 hours before the open or something. So anyways, I'm thinking, okay, now pre-market, an hour before the open, it's sitting here. I'm seeing an ABCD pattern ready to go. I'm thinking this will come down, hit the C, and it does that in the morning. In the first minute, it could do that. It could come down, wick, and go. And as it wicks, I want to take it long in the first minute. I have that aggressive streak in me. I like to do stuff like that. So that was my idea. Let's go. First minute, I'm going to get an entry from 272 to 280. I'm going to make 50 grand on this day, and I'm going to retire for the year. That was my excitement. Again, not so much emotional intelligence, right? But the analysis was solid. Also, what helps me pick these numbers, 480, 472, is, well, I like to see a combination of things. Looking for horizontal levels on bigger time frames, looking for orders stacked up on the level 2, even in the pre-market. I look at it at the pre-market. Those orders can come and go, but I look at it, it gives me an idea. And of course, I reconfirm it after the market's open. And of course, I like to look at it at round numbers. 472 in this case, 470, 480. Round numbers make sense to me. So again, here's my mindset. I'm going long, and I'm going long early at the open, first 1 or 2 minutes. Sure enough, it did this at the open. My entry area was here, but I started taking entries here, as you can see. Enter, stop out, enter, stop out. Any idea what you call this kind of trading, guys? Stop level, set at the time you enter the trade. It's manual stop losses. Yeah, you guys got it. FOMO trading. You watch the trade, same names. Yeah, Andrew, I watch the same one. Same 5-6 big tech stocks every day. Yep, chasing, FOMO, PK trading. Yeah, it did chop, but my execution was FOMO style execution. That's what I call it. So here's the redundancy now. Check this out. My setup was good. My execution was poor on the entries. But what saved my ass again were my stop outs, as well as my setups. They saved me too, because it wasn't ever really going to be a short. It was always long. I was just thinking long, the whole thing. So again, redundancies, right? And really, all of it is up to you. I was all right with the setup. I was poor with the execution. Again, that's poor emotional intelligence. FOMO comes from lack of emotional intelligence, basically. Not being aware of your emotional state 30 seconds before the bell. That's really something. I mean, I trade the open every day, and so that's something I need to become more and more aware of. And I know if I get better at it, I can just blow up this account. I can make it much, much, much bigger. So I want you to check something out here. I'm gonna lead into this. So FOMO trading, it wasn't my trade book. It wasn't my plan. Really wrong stuff. Don't do this. Came down to my level. Sure enough, was looking like it wants to go long from here. That's my entry. Okay, it came down with volume, boom, and no longer the volume just stopped, stalled, made a new high. I'm in. Take the long. And then I added in here. Remember, my target's 480, so it's way out there. So I'm not really taking partials here. Now, there's two ways to think of VWAP. It's an area you take partials because it could easily reverse from there, yes. Or wait for it to break VWAP and tighten your stop. Bring in, instead of your stop being down here, bring it up to VWAP, add in further. That's what I did. That's why I got this massive trade to pop. So this really was approximately, I don't know, must have been a $15,000 trade. It's just that I lost the first couple of $1,000s up here. That's why the P&L shows 10 grand. Really, it was a much bigger trade than what it shows. So here's what's important. The setup was good. My execution was poor. My stopping out habits saved me. And then I got my head screwed on again straight, where I was able to trade precisely as I had planned before the market even opened. Yeah, PK trader, the logic, yeah, VWAP, basically it's an area of interest in day trading. You can, if you're taking a trade towards VWAP, you can take partials there. The other way to do it is take it up towards VWAP. If you think, according to your trading book or trade style, whatever you're analyzing, you think it's going to claim VWAP, then let it claim VWAP. You don't even take a partial. Let it claim, and then add in above VWAP. That's what I did here. Added in as it claimed, and it retested VWAP. I was adding in. My stop was here. Now it's up here. And boom, get the trade. Right? So I got the trade, got the pop. Same thing on Tesla earlier. It popped. It got away from the moving averages. It stalled out. And as it stalls out, I'm like, oh, crap, I got to get out of this. This is not going to go anytime soon. And I'm in an options trade. Options go against you quickly. So I'm getting out of about 90% of my position here. The rest is down here below, before break even. I get out here. Once it makes a double top, I'm like, that's it. And you know what? We're getting into an hour in the trading day. It's getting to be about 9 o'clock at night for me. I want to go do other things. I want to go watch a movie, so I'm done. That's that. So there you go. That's how that is. As you can see now, my style is fairly straightforward. I set up on the daily chart and the 30-minute chart, and I'm just waiting for confirmations on the 1-minute chart, level 2, the time and sales, all that stuff. So really, that's it. More recently, I've been taking trades after 30 minutes after the open, where I'm waiting. If I get my opening trades, I get them. If I don't, then I allow myself to reanalyze and maybe take another trade based on the 30-minute chart. So what's the question here? Missed it, but where did you get 472? It was here. 472 was here in the pre-market. It did an ABCD sort of thing. There was an ABCD here on the 1 minute. You could have seen it. I remember this. This was a few days ago. Unfortunately, I don't have a screenshot of it. It was right there. So I figured 472 and off it goes. That's it. Just levels. Yeah, sure. Thanks. I'm glad you guys are still here. Wow. I thought I lost you all by now. Cool, man. Anyone want to see more? It's a magic trick. More? No? Yes? No? Yes? Cool. All right, let's roll. Okay, here we go. November the 8th. Wow, I wish I had a screenshot. This is me putting something up on Twitter. Nasty red day. The trade plans were flawed. They were backed up by FOMO execution. That's why the whole day was red. So this is what I was talking about earlier. Setup plus execution equals results. Simple. So if you get one wrong, ideally the other one saves you. This is on technical stuff, right? On this day, on the 8th of November, I ended up with a nasty red day because I failed on the setup side of things. I didn't see it right. I was confirmation bias or whatever the hell it may have been. And then on my execution as well, I failed. I mean, this kind of trading right here, if you can see it, it's all FOMO. It's like buying at the highs. It's no good. So you got to have those redundancies. Again, I'm repeating myself here because I think it's important. You got to have redundancies in your trading that saves you from yourself. That's why I have two elements, setup and execution. And that's just technical stuff. The bigger stuff is the personality and who you are. And that is on the setup side of things. Before you trade, what do you do every 24 hours? How do you live your life? Are you well balanced? Is your life sorted? Not necessarily sorted, but do you have balance? That's really, really critical. That brings in all that emotional stuff. On this day, I was a wreck. As you can see, the results are very telling. So let's have a look. Yeah, I think this is more details on that day. Apple, I was thinking to short it from the previous day's high. That's about there towards 180 all the way down. Why would I do such a thing? Look at this. Big run up. It's a potential area of resistance. And what's interesting is that on these two candles, it really got away from all the moving averages here. Moving averages crossed here, but it extended itself. So I'm thinking, okay, it's got to pull back. That's the daily idea, the idea on the daily chart. And here I'm thinking, yep, there's a top there. If it rejects there again, it's a double top, and off we go. But you realize what I'm doing here? I'm creating a double top in my head. There is no double top. It's not been created. There's only one top. And this is me fooling myself again. Not very smart, right? So anyways, this in my head, there was a double top. So at the open, I'm going to short it from this high, yesterday's high, apparently already made a double top, down towards 180, big round number, and I must have seen some orders on the level too. Not very smart, and that's me taking that Apple put option, lost $1,300, trying to short this in this area. It never lost the previous day's high after the open. It just stayed there. The real trade was, it was long off the opening price, and you can take a long off the opening price again. Opening price is something I always find very critical for intraday trading. If you're trading the 1-minute chart, check out the opening price, check out the yesterday's close price. To me, these are two very critical areas. A lot of my trades are based off of these two areas. On this trade, if I had no plan, I would have maybe considered a plan after 10 o'clock for a 30-minute opening range breakout where I can buy here near the low of the 30-minute chart as it's bouncing off of here, take it to the top of the 30-minute chart. If I get the breakout, great. If not, I'm in here. I can take partials in the area up here. So that's one way to have done this. Realistically, there was no setup for me here. Maybe you could see an ABCD pattern this way, but because this was extended on daily and I was thinking short here, if I was thinking long here, there's a contradiction. This is not on. For me, this is not a trade. This is tossed away. When I'm thinking clearly, I throw this away in about 10 seconds before the market opens. I'm doing my pre-market prep. 10 seconds, I look at this and I'm out. I'm not trading Apple today. Straight up and simple. So that was that mess. What else? Amazon, long from 143 towards 145. Look at that. You saw that on Apple previously? Would have been a ABCD pattern. Well, here again, it's the same thing. It was actually an ABCD pattern, but it went short. But let's get into this a sec. The setup is similar. It made a big run up. In this case, Amazon did a bit of an ABCD pattern here on the daily, and it ran up. And I'm thinking, okay, so it already did an ABCD pattern, so it's had its breather before it continues its move up. And so it's likely to continue its move up. If it was up here without taking a breather, I would start thinking short. In this case, I'm thinking up, long. So I'm thinking, all right, it's ought to be a long from 143. Why? Because that was an area of consolidation. Now, that wasn't right. If this was a long, this is an ABCD pattern. And to confirm that it's really a breakout of the ABCD pattern, well, it breaks out of this area right here, which is yesterday's high. Straight up and simple, right? But I'm being aggressive. I'm trying to get in a tight entry. I'm like, yeah, on the 1-minute chart, I see support pre-market. I'm going long from here. The head wasn't screwed on right. And so there it is. Taking that short, losing money. Not too smart. What do we have here, Raf? I can tell you how many times you see a chart like this. Yeah. It's holidays, takes more room, topside, boom. Yep, I feel you, Raf. I feel you. That's nuts, huh? Isn't it wild what we get into here in day trading? That's why I say you got to be sorted out personally, emotionally, balance in your life, all that stuff. Then you'll be able to see all this shit clearly. This is really just a bunch of pixels on the screen, and we're trying to make money off it. I mean, how crazy are we, right? So, get your shit together before you can do this stuff. That's kind of the way I see it. Now, check this out. I want to share something else with you on these charts. Over here, I was thinking long. Okay, didn't happen. I lost money doing it. Okay, fine, that happens. But after it does all its business in the morning and it's done its move short, now you can reanalyze it, let's say 15 minutes after the open. Now you have a red candle, it's about down here. Now you can see a double top. You haven't fooled yourself that it's making a double top. It's made it. It's looking short. What's interesting is now you can get ready for a short. So about 9:40, 9:45, you can think, okay, in a bigger time frame, it could go down, which is in alignment with the daily chart analysis. So that's interesting. So what's beautiful here is this right here. It goes back up, retests yesterday's close. That's a short right there, man. Right there. And right there, I mean, not when it goes above yesterday's close. When it goes up there, it rejects the big moving average. It comes back down. Even if you miss that entry, no big deal. Here you go. It rejects, VWAP here. Another opportunity for a short. And these shorts here are aligned with your bigger picture thinking, at least for me. That's why this would have been a very high conviction trade for me to get in here or get in here. But after all this mess, I was not in a state of mind to trade. I was just ready to throw the monitor out the window. It was that kind of mood. But once you get your head screwed on right, this makes sense. You're thinking short from the daily and 30, and the short setup happened here. Short setup wasn't here, but it showed up 15 minutes after the open, and you can think, yep, the double top is complete. It's down. And we know PDC, yesterday's close, is always an area of interest, very important level. Here we go. Boom. Big trade. This would have been a big, big trade. And it's actually a fairly simple trade as well. So again, all of this over here on this day had nothing to do with trading. It had to do with the trader. With the trader not being in the zone, not being in his normal headspace. So that's that one. Let's see. On the November the 7th, okay, I had a bunch of plans, different trades, different stocks. And as it turns out, they all worked out. So I'm going to see if I can share some of these with you. Meta, long from previous day's close to 318. That was the idea. Why would I do that? Well, look at this. Run up, area of consolidation. I like to look at this as a wedge or a triangle pattern. It's got a top. It's got a upward slanting triangle at the bottom. Looks like it wants to pop up. That's the idea on the daily chart. 30-minute, same old thing. Came down, double bottom, strong before the market even opens. All I want to do is go long on this thing. Previous day's close, always an area of interest. In the pre-market, look at that. It popped up from there. What I like is for it to retest previous day's close and go. That was my idea. I'm looking at the level 2 before the market opens. I'm thinking 318 is a potential area of resistance as it did the previous day. You can see orders on the level 2 even before the market opens. So I made that plan, PDC to 318. I'm watching the first minute candle. It comes down and it's bouncing around here. It really doesn't want to go down to previous day close. I'm thinking, all right, here we go. As it starts going up, claims this big moving average on the 1 minute. I'm long. The stop loss is the bottom of the candle itself. That's there. Then it goes up here. It claims the opening price. Again, a very important level. Right there, I add into my position. And that momentum continues. It pops. As soon as I see the momentum stalling, again, it didn't hit my target of 318, but when you're trading at the open, you're dealing with momentum. And the momentum will play with you whether you like it or not. So you better play. So get ready to play. As soon as I see the momentum don't want to play with me the right way, I'm out. And that's me getting about 80, 90% of my position off. And this is a heavy position. This is 100 contracts at, 350 on average. So it's pretty heavy. I'm in. Take most of it off. The rest is out before even break even. And I'm out. Why? Because it loses opening price. And I'm like, that's enough. I don't see. This is moving, bouncing up and down. That's it. That's how I took this trade. It turned out to be a good green day. So this one was fairly simple. Again, the conviction on the trade came from here. If I had just put Meta on the screen and tried to stare at the 1 minute chart exclusively after the bell, I really don't think I'd be able to do this. I really don't think so. I'd be chopped up and down, going long. So I'd be going long here, stopping out here, going short here, or short here, stopping out. It would have been a mess. Done all that. How do you determine if you are in the zone or not? Very good question. Meditation. I do it every day, usually twice. It has helped me with self-awareness. I strongly recommend it. And this is not a webinar on meditation, but definitely reach out to me, email me. Happy to talk about it, at least the way I do. There's 1,000 ways to do it. Something I've been doing a lot more of in the last few years. Powerful stuff. Helps you become aware of your state on so many levels, physical state, emotional state, all that stuff. So it's part of my playbook. I do 5 minutes of meditation before the market opens, before I start my pre-market routine. So that's a piece of my playbook. Yeah, very important. Good question. Thanks. Sure, of course, Dwayne. No problem at all. That's what I'm here for. Google. I don't trade Google anymore because the options charts are just I don't know. I can't make sense of it. So the idea on this one is long from the PDC area, previous day's close, up towards 133. Why would you do such a thing? Let's have a look. I'm trying to remember what I thought on this one. It was long. Oh, yeah, here we go. It's going up. 2 good green days. And then, yeah, here it is. Long. And what was interesting, this day, look at this ABCD pattern. Another ABCD pattern with the D really being previous day's close. Pre-market, again, previous day's close. Confirmed that it wants to hold it. So, and it's strong. It's up here. It's about 332 before the market opens. So I'm thinking, all right. Here's what I like. Breakout, retest of the breakout level, and off you go long. So that was my idea. Very simple market structure stuff. So I was thinking 133, probably saw something here on a level. It looks like a level there, as well as on the level 2 before the market's open. I always like to look at that. It makes sense to me. So PDC, now here's the fun part. The setup was just fine. I don't see any flaws in that at the moment. But look at the execution. I'm entering at the close of the first candle right here. It came down to PDC in the first maybe 10, 30 seconds. I missed my entry. I chased it. What the hell, man? What the hell? But what saved my ass, again, was this little red arrow here. I stopped out. Stopping out is an instinct at this point. So you really ought to practice trading till stopping out is an instinct. That'll save you so many times. I can show you today already 10 examples where I got saved by stopping out. In this case, my setup was fine. My execution was flawed. My stop out is what saved me. I should have entered in this area. I entered here after it claimed the opening price. The trade was already gone. There was no way to enter here. This thing's just bouncing around. So as soon as I realize I'm in way too late, I hold it for maybe 10, 30 seconds or something. It loses the opening price. We're here, or before it even loses it. Yeah, I'm out. Just a little below break even. So it's a small loss. That's it. So this could have been a massive loss. Imagine if this is a $350 loss. If it came down here, this is like a $3,000 loss. It's massive. So this is what saved my ass. I can't tell you how important stopping out is. Really is. Like whatever your trade book is, however your style is, just make an instinct of stopping out according to your trade book every single time. I can tell you, I've had days where I'm down and I have to close the day down $20,000, $30,000, multiple days. I've learned from that. So I'd rather you guys don't have to do that. Just do it up front, please. Save yourselves. It's important. Let's see. Amazon. Oh boy, I'm losing my voice a bit. What do we have here? What am I looking at? Long, 140.5 towards 142. Let's see. Yeah, this one, I think, yeah, similar chart to the previous one. Anyways, what's interesting here, it goes up, takes a breather on the daily chart, then it continues its move up. So I'm thinking it's got conviction, it wants to go. It took a breather, it's got a good fresh breath of air, it wants to go, it's ready to go. Daily chart, right? 30-minute chart, look at that. Yesterday, came down, it had a good run up, came down, and held below the close. But pre-market, claimed the close, confirmed that it claimed the close, looking strong. I like this. I want to go long. Why the 140.5 area? Let's have a look down here. Think, what did I see? I must have seen support somewhere. Oh, here we go. There we go. Now I see it now. Look at this. It's the area that was previous resistance. And this is a little piece of technical analysis. What was previous resistance, if it turns into new support, it's very powerful support. And vice versa. What was previous support can easily turn into new resistance. And so that is a real centerpiece of the way I look at horizontal levels, especially if they're happening on bigger time frames. I have a lot of conviction on it. That's where I got my conviction on this, 140.5. So I'm ready to go long 140.5 up towards 142. Where did I get that from? Probably saw something on the level to a massive order just sitting there. And I don't have it marked on this chart, but look at that. That looks about 142, right about there, that area. Where it went up, consolidated before it moved up again. So probably the top of that candle, may have coordinated over here, something like that. But that's the idea. The idea is really looking at bigger time frames, getting your conviction from there. And so that was the idea. Look at this. Boom, shot right up, right at the open. What a great trade, huh? I don't remember if I took this one or not. Well, obviously I didn't. I don't have any Amazon trades here. But boom, if you were in that, get an entry in the first 30 seconds as you're convinced it's holding 140.5, which also happens to be the opening price right there. It drops below opening price. In 5 seconds, it probably popped up. There's an entry there, super tight stop. Off you go. The momentum's dead. Get out. At about 141.5. Get about 80% of your position out. No big deal. It comes down here. You can still hold that little bit you've got. Still down. Your stop loss is here somewhere at your entry price. If it bounces back up, you have an opportunity to add in again above VWAP. Take the move up. This could trend all day. And if I'm doing this, if I'm in, I get my partials, it comes back down, and 15 minutes after the open, I'm adding in, I will not sit here and watch it anymore. I will put my stops in, put my orders in, let it sit for the whole day. I'll come and check it again at 10 p.m., 11 p.m. before I go to bed. And that's it. I don't want to sit here looking at it. That's not 80-20. That's just consuming my time. So that's how I see this. Helen, do I watch the cues? No, I don't. Too much to watch. Just simplicity. You want to hear a funny thing? I've got 6 screens right here. Most of the time, I'm only looking at one. This is just a waste of money. So, yeah, I got to downsize. It's silly. I've really kind of figured out efficiency and what is efficiency from my brain before I get overwhelmed with too much thinking and too much emotions going up and down. Really got to figure out efficiency. And that's the 80-20 principle again. Really critical stuff, in my opinion. And all of this that I'm sharing with you all comes from the 80-20 principle. Find those truly impactful things that have an impact for you and do that. And do more of that. And do more and more of that. And less of all the other crap. Because for you, the other stuff is crap. You know, but you got to figure out what that is for you. Trial and error, sim trading time, working with a mentor, being in the chat room, talking to guys who know what they're doing, who have some experience, all of that stuff. That's how you figure it out. Standing on the shoulders of giants, right? So that works. Yeah, it makes sense to me. Yeah, Evo, glad you're enjoying it. Yeah. Well, as long as you can keep rocking on, man. Yeah. Play some heavy metal after this webinar. Wow, it's 11:30. It's 12:30. Crap. Oh, well, no big deal. What's on the other screens, PK Trader? I ain't going to share that. You want to know the dirty stuff I'm looking at? No way. No, they're empty. When I'm trading, they're empty. I can't keep stuff on because it's distracting. So, no. All right. NVIDIA. Wow, I think I still have a few more to go. All right. Long 433 to 440 and a possible short from 440 to 430. Oh, yeah, I remember this day. Pretty wild. All right, why the long? Let's start with that. 433.5. Why would that possibly be support? Well, again, going to the daily chart, look at that. I like this. It came down, big old hammer, big old move up, claimed the moving averages on the daily chart. And so it's looking strong. That's the move on the 30-minute, pre-market, post-market. It's all looking strong. I see this as an ABCD pattern. It just wants to go. I see a range on the 30-minute, and it looks like it's going to be a long. That's my first idea. But I also know it's done a lot of business just recently. So this is an area, now overnight it did a lot of business. So this is an area where long-term holders may want to sell at the open. That's usually what this stuff is. When you have a gap up and you see it going down at the open, that's usually long-term holders, something like swing traders and stuff, selling their positions. So I had the idea that, okay, this is interesting. I want to go long. I better be a little careful. There's also a short. If it just pops up really strong already at the open, 440 going down. 440 aligned right there with that doji. And I think I picked a couple other candles there that worked as well. And again, level 2, pre-market level 2. Big orders there. 430, I found it right here, support. And 433.5, I think I was just trying to be too cute or something. But that level doesn't really make a lot of sense. It's kind of somewhere, where is it? No, I'm sorry. Oh, what am I talking about? No, I wasn't trying to be too cute. Good. It's the top of this consolidation. There you go. The resistance and the support of the ABCD pattern, right? So that's what I'm thinking. Go long. So, Dwayne, yeah, it will be posted, recorded, posted, all that stuff. Don't worry about it. It's all there for you. So that's the idea. I'm thinking about a long. It's a breakout of an ABCD pattern. So that's long from here going north. And if it does go, I miss it, there's a possibility for a short. Now this short, a little bit premature to plan this in the pre-market. This should really be later in the day. Because look at where it's opening. You know, it's unlikely to be so strong at the open that from here, 434 area, it goes straight up to 440, and then you take a short in the second minute to down from 440. If it's doing that move up front in the first couple minutes, it is super strong. You don't want to be shorting up there, okay? So this, where's it go? Sorry. This idea to go short is not too smart. You can just leave that, let it be. So that's the idea. Long from here. First minute, it opened, it goes long, it looks strong. I'm getting into a position, I'm adding into a position, I'm stopping out quick. Now, I can tell you this is poor execution. I don't see anything wrong with the setup. But this execution on the first minute, going up long right here, and then of course it crashes down. But I got out before it crashed me down. Why do you guys think this was poor execution going in here? Any ideas, any guesses? Quiz? Well, Matt, there is the 3-minute rule, but I don't respect that rule. No, that's different for everyone. Retest, extended. Yeah. There we go. That's the key one. Extended. Val got it. It's extended. Extended from what? From the VWAP. The open is interesting because it always likes to touch the VWAP at some point during the open. One of my rules on the 1-minute chart is I don't want it to be extended from VWAP. I'm entering over here. The VWAP is down here. I'm adding in here. The VWAP hasn't moved. It's still here. Gosh. I just want to shoot myself sometimes. So this is wrong. Straight up wrong against my rules. Poor execution. But again, stopping out saved my ass. This should have been a $10,000 loss. Really, it should have been. I deserved it. But my instincts just got me out of it. Again, practice. Get into trading terminal. Do the replay mode. Practice getting in and out. Practice stopping out. Stopping out is the key. So I had a good setup aligned here. I had poor execution here, but what saved me was that red arrow again. Stopping out. Very important. Right? I tried the same thing here. It was actually working. It was in this area. Now it's ready for a break. It came down, hit the bottom of my ABCD pattern right there, the C, going long. It claimed all the moving averages. Now the averages are kind of in the area. It's getting ready to go. I'm taking an entry. Went up, hit the high of day. It's not looking good. It's looking extended. There's no momentum. There's no market orders coming to move the price. I can watch the tape. It's really not convincing. So I take partials. A lot of it, not a lot, maybe 30% maybe, I don't remember. And I stick the rest off at break even. And if it stops me out, great, I'm out, no big deal. And that's what happened here. So that execution was perfect. That worked out. This execution was crap. So really, actually, I think I must have lost about $3,000 on this first trade, but made some of it back here. But Tesla saved the day on that one. So questions, what do we got? Which line is VWAP? It's the blue line. Blue line, Andrew. I use pretty similar stuff to most guys in the chat room. I've hardly messed around with DOS, really. It's similar to most guys. What else we got? Tesla. Oh boy, this was a fun one. The long idea. Scotty, one at a time. You know what? I'm a little embarrassed to say no, I don't. I should trade one stock at a time. But again, I think that's the aggressive nature in me that wants to get in. I see it. I want to go. I'm a very excitable kind of person. I mean, why do you think I play heavy metal guitar? It's fun. It's fast. But so, yeah, more than one at a time. But what saves me on that is a good question. What saves me is that my rules are on the bigger time frames. So I really make sure of that setup on bigger time frames. It's not like I'm trading NVIDIA and Tesla at the same time. And then 10 minutes later, I'm trading Apple and Microsoft and then looking at Google and then taking another one on AMD. No. Now, I used to do that. And that didn't work. And I blew up a lot of money doing that. So I'm not recommending that for anybody. I do it on the longer time frames, which I like to plan my trades out. And this is what helps me get conviction on the trades, helps me take bigger size on the trades, helps me take a lot of leverage with options, all that stuff. So, yeah, good question. Thanks. Thanks for revealing me. Appreciate it. What am I thinking here on Tesla? 213 to 218, looking for a long. What happened here? Came down, made a hammer, looking strong. That's on this day. That's the hammer close. After the market close, strong. I mean, this just wants to go up. I don't see anything short. Now, there is the case to be made that it's already done a lot of business overnight. Guys want to get out of it. Now it's going to go short. What's interesting here is I don't see any one 30-minute candle while the market was closed that was massive. It's not. It was all trend. So the trend is in motion. If it was a massive one candle pop up to 216 area before market open, then I'm thinking, ooh, double top perhaps, and it go down. But this is a trend, 30-minute trend. I'm like, wow, I want a piece of this. So before the market opens, I'm looking at this action for about an hour before the market opens. See a bit of an ABCD pattern. I see the consolidation. The bottom is 213. So I marked the line here, 213 on the 30. And then what do I have? I've got 214. That's probably the top of the consolidation. So potential resistance area. I'm thinking 218. It's very strong, and we know Tesla, it can do that. It has potential to go all day. And they could just do it. And so that was my conviction on the trade. I also looked at the level 2. I probably saw some orders at 218. I must have seen some orders at 213 to help me pick that as a bottom level. And I'm ready to go. This one looks good. So at the open, what am I looking at? Go long at 213. So this thing right here, it's weak from 213. Look at me. I didn't take a trade, thankfully. I waited for it. I picked out that it is actually short. Even though it went up off the opening price, it was so easy to me to be suckered into taking a long here and stopping out like I did before, right? So I didn't. And then look at this. A lovely little double bottom. Yeah, thanks, Bell. That's it. Double bottom on the 1 minute convinces me that, and look at this double bottom. It's cool. In my view, this is the bottom, okay, 2 bottoms. And the confirmation that the double bottom is real is that it makes a new high off of the center of the double bottom. This is the center high, which happens to be also 213, my area of interest, which also happens to be the opening price. I mean, talk about alignment, huh? Isn't that great? Love it. So here I want to get in and I want to scale in as quick as I can. I've already got so much confirmation right in this area. That's me. I get in, I scale in quickly, and I get the move. Unfortunately, or fortunately, however you like to see it, Tesla likes to pop. And when things pop, there's a potential that it pops back. It's not a trend moving. I mean, at this time of the day too, early, things don't really start trending. So I'm like, all right, it popped. Where is it stalling out? Start taking partials. I saw 215.5 right about there. It's really stuck. It's struggling. It doesn't want to go. It may want to go. And I'm thinking after this one, this hammer comes down, retests moving averages, thinking it wants to go. I'm still seeing orders up at 216, 217, 218. If I'm getting all that conviction, I'm adding in. I'm adding in and tightening my stop loss. My stop loss was here, which was about here really. So I'm tightening it. I want it to be at break even. I want break even to be about here perhaps. That's me adding in, but within 10 seconds, I'm like, no way. Now, this is a double top. I'm out. I figured that out 30 seconds after I entered. It could be a double top. I'm just done with this. And you can see after so much conviction, got into good positions, and that's what allowed for a big trade. And it made up for all that garbage I did on NVIDIA earlier. So that makes sense there. Helen, do you trade if there's a gap? I don't like gaps, but you got to define gaps. But look at this. This is a gap on the daily, but it's not a gap. Explain that to me. So I don't really see this as a gap, not genuinely. A gap to me is, I like the 30-minute chart. If it's here and then it gaps up to here, now that's a gap. Now I can't read it. The pattern's broken. I don't know what to do with it. So I dump it. It's out of the way. All right, what else we got? Okay, cool. Saving my voice. Coming near the end now, guys. So the bigger picture of trading. I shared with you a fair bit of technical stuff, kind of how I see things. Of course, there's a million different ways of seeing things. Volume, price action, whatever, all that stuff. And we're all here to try and make money, to make a living out of this, or at least to make some money out of this. The truth is, I think it's, again, another 80-20 thing. In most things in this world, you're not going to get what you want. You're not going to get what you fantasize about. It's really not going to happen, especially in day trading. Get rich quick, all that stuff. It's not going to happen. What I believe does happen in this world is you get what you deserve. You don't always get what you want, but you get what you deserve most of the time. So if you want to be $1 million trader, if you want to be consistent at day trading, the first thing you got to do, before doing anything, the first thing you got to do is become the kind of person who deserves that kind of success. What kind of person is that? Imagine that in your mind. Now, you may have a definition of what that kind of person is. I may have a different one, and everybody will have a different one. But it's important just to visualize it in your mind and what makes sense to you. And now become that person. Do that first. This person is disciplined, persistent, has a good relationship with money, can manage risk, is emotionally intelligent, whatever these traits are. First, embody that stuff. Make a habit of it. Fake it till you make it is the other way to say it. I don't really like that fake it thing. It kind of inspires the wrong ideas. But start putting these habits into your life. You become this person who deserves this kind of success. I mean, you want to be a billionaire and launch rockets to the moon like Elon Musk and all that. Well, what kind of person is he? You can see the traits. He's a dreamer. He's a little obnoxious. He knows how to manipulate the markets. But really, he's in the working stuff when it comes to building rockets and cars. He's really persistent, and he doesn't take no for an answer, and he kills his employees to make it work. Okay, that's what he does. That's what it takes. So whatever it is that your goals are, and here we're talking about day trading, you gotta first become the person who deserves it, and start practicing that right away as you're practicing trading in the sim on the first day. Those life practices, the discipline and the persistence, and being aware of fear. Emotions are a big piece of it. I'm not saying fight your emotions. I'm saying become aware of it. Meditation is a big piece of it. Again, you guys want to talk about meditation and all that, just email me or reach out to me. I'm happy to share that stuff with you. That's another webinar on its own. But really, you got to become the person who deserves it first, and then you put yourself in a position to get lucky, meaning maybe you'll get it if you first do this hard work. Put yourself in a position to get lucky. That's the way I like to say it. So to do that, you got to practice pushing your comfort zones regularly. For me, my regular practice is lifting weights in the gym. And I just don't go lift the same weights every day. I try and push a few pounds extra every day, or a few extra reps, or whatever it is. And I turn on that heavy metal music real loud and disturb the neighbors, and I'm pretty obnoxious about it. But you got to push your comfort zones if you want to develop new habits, develop new traits, break old habits. And you got to get used to pushing your comfort zones. And that's where progress is really made as a human being. AI will tell you that's machine learning. Oh, well, that's machines. We're not machines. We are emotional beings. And our subconscious mind is full of emotions, and it really overpowers us most of the time. So get access to your subconscious mind via meditation, push your comfort zones, visualize the person who deserves what you want to have, and try and surround yourselves by those people who have already got what you've got, what you want. And then start embodying that stuff in your daily routine, daily. And then maybe you'll get, it'll come to you. This is the law of attraction stuff, right? It'll come to you. If you put out that energy in the world, you're attracting it in your life. That's kind of what this graphic is all about. It's more about being a trader than just doing all the trading technical analysis, adding a new indicator, learning a new strategy. That's not significant. What's significant is here, become the trader first, the high performance person first, then the results will come. Hope that makes sense to you guys. Joe Dispenza, I've never heard of him, sorry. Watermelon, yeah, email, let's get into it. In a sec, I'm gonna share my email here in a sec, but this just leads me to another little point, The Art of War. This book I read a couple of months ago. I can't believe it took me so many years to get this book on my desk and read it. It's an old book. We all heard of it. I'm sure it's 3,000 years old or whatever. I just read it recently, and so much in this book. It's one of those 4 books that I keep on my desk and as a reminder to really try and embody the stuff. I'm going to just read this out to you. It says here, the good fighters of old first put themselves beyond the possibility of defeat and then waited for an opportunity of defeating the enemy. And on the same page says, to secure ourselves against defeat lies in our own hands, but the opportunity of defeating the enemy is provided by the enemy itself. So what's important here is translated to day trading on a technical level. Wait for your opportunity to come to you. Wait for your setup to come to you. By doing that, you already put yourself in a position where you cannot be defeated. And then the opportunity to make that money will come to you. The enemy provides it to you. The market provides, man. It's abundance. It's that abundance mindset. Same thing we discussed earlier in the webinar. Abundance thinking is massive. This Art of War page right here is basically the same thing. So protect yourself by waiting for your perfect setups. Protect yourselves by becoming the trader, the person who deserves that success. Protect yourself by finding stability and balance in your life. And then wait for the market to come to you and take that freaking options trade and make $10,000 a day. It's there for you to be taken. It's right there. It gives it to you every day. Definitely do it. Yeah, Matt, I'm going to pull up my hotkeys in a sec. Thanks for the reminder. Appreciate it. So definitely, yes, that's the stuff, man. You got to do it. You got to do it. Very important. So just wanted to share that with you. This has had a big impact on me in the last 3 or 4 months since I last read this book. So it's another thing I keep on the side of one of my 6 screens. Just this little screenshot. And here we go. So if you want to reach out to me, Twitter is pretty straightforward. I put my trades and trading plans out there every day. If you want to figure out what I do outside of trading, if you want to contact that way, Instagram is there. I'm not really active on there. Mostly I just look at motorcycles and guitars on Instagram. My email is here, Avi at The8ors. Interested in one-on-one mentoring, reach out to me. If we're a good fit, we could possibly work together. I can help you out. Any of you in Dubai or show up in Dubai, reach out to me. Happy to meet up always. Always good fun. And now we do some Q&A. So let's go. Who got one? And I'll pull up these hotkeys for you now, Matt. Questions? And it is almost 1 a.m. Wow. I'm not even tired. You guys are too much yet. Yeah, you were in Dubai? Cool, man. Reach out to me then when you're back here. How do you scale up to 50 contracts? Andrew, you do that with conviction, with experience, conviction, confidence over time. So first you become the person who deserves to get the results from trading. Then you go and trade. And the more success you have, the more confidence you'll have to scale up. But scale up gradually. You don't want to just double your size. Scale up gradually. That's the only way I know how to do it. Paras talks about this a lot, actually. I think he was talking about it in the chat room today. But scaling up is an important thing. I do it kind of by scaling into trades, but you can scale up size. It's a gradual process. What's that airplane behind me? That is a Mamba 10. It's an aerobatics airplane. I do RC flying. It's a whole lot of fun. I love that thing. You can hover on its prop like that. Freaking cool, man. I haven't flown in a few months. It's been hot, but I should go out soon. So I'm trying to get my DOS worked up here. Market's closed, huh? Sure, Omar. Most welcome. What trading books did you learn from the most? I learned from, let me think. But you know what? Let me just show you those books to you. I'll bring them up right here. Just a sec. Wow. Oh, no. These are all philosophy books. Just a sec. Okay, this is where Andrew kicks me out from being a moderator because I'm doing something he doesn't like. I'm not promoting Andrew's book because you guys already know about it, right? But these two books on a technical side of trading, this is it for me. That's all I ever really read. The rest of it is more self-development, mindset, things like that. Hope you all got a screenshot or something. Let me know and I can put it down. Cool? Ready? Steady? Alrighty. Cool, man. There is the Mark Douglas stuff. Very powerful stuff. He's put out a lot of good information. I've read parts of his books. Great stuff, man. Great stuff. Hey, you had to go. Not sure if you shared your DOS setup. I have not shared that. I'm pulling it up right now. Let me see. How do I'm trying to open up DOS here while I'm here on this webinar. Where the hell is it? This is the problem with 6 screens. You never know where anything is. It just moves. Day trading. There we go. Oh, man. Excuse me. Open desktop. There we go. Okay, there's DOS, but I'm going to pull this off. Give me a sec. What the hell? Takes a minute to load up. All right, that's today's trading. And there we go. Back to this. You wanted the hotkeys. Matt wanted hotkeys for buying 50 contracts at a time. So let's get that out there. All right. Paste. There you go. That's my hotkey for buying 50 contracts at a time on DOS. Please test it in the sim before you go live. You know the usual thing. Disclaimer. So, yeah. Here is one. Most welcome. Most welcome. Yeah, PK Trader, this is the contact info. What are you looking for? You're looking for... Oh, you didn't see the books. Okay, sorry. Books. You see it in the headshot? Banu, my pre-market prep is about 30 minutes. 30 minutes before the open, I show up, and most of it is kind of goofing around in the chat room with Raf. And I spend maybe 10 minutes working before the market actually opens. Yeah, there you go. Some more books. You flip your pre-market bias after the open or just abandon stock? Yeah, Melinda, if it doesn't work out, I abandon the trade. I do allow myself to reevaluate it maybe 15, 20 minutes after the open. After the opening price discovery stuff is done, it could set up for a 30-minute breakout or something of that nature. So, yeah, that's what I do. Bookmap, no, Bookmap crashes my computer, so I dumped it. I might get it again. Let's see. It looks good. It looks like fun, but again, you know, I believe in simplicity. Feels like it's complicated. Things are working for me. Why break something that's working, man? So far, it's not. I'm not hitting any limits at the moment that I need Bookmap to help me break out of this limit. So I'm kind of looking at it that way. Other book is Anna Cooling. Yes, thanks, Joe. Can you share your DOS? DOS, sure, yeah. Let's see. What do you want to see on DOS? Okay, I guess you guys all got the contact info. Follow me. I'm looking for more followers, all that stuff. All right. Do you trade while traveling? Yeah, Scott, I used to. I do. My laptop's kaput right now, broken. So I don't like to trade when I'm traveling. It's just not a lot of fun. I'm traveling to go sit on the beach and catch a wave in Bali or something. I'm not really interested in trading. Done it, but not so smart. There you go. That's my DOS setup. This is today's trading. P&L and everything. Got level 2. Oh, the market's... I thought the market closed. Wow, daylight savings time really screwed me up. All right, what else we got? Easy to upload the hotkey and layout file. Yeah, Joe, I could. Raf, I'm going to need help with that drive. I've never even used it. Don't even know where it is. So I'll upload my hotkeys and setup file up there. So that'll help. My setup is for 6 screens, though. I do have charts kind of all over the place. So if you're going to use that, just kind of watch it. Well, I'll get that done. That shouldn't be a problem. I'll put it up in the chat room on the BBT drive. Scalping options goes fast. Have any rule with the minute bars? Anything? Nope. No, nothing like that one. I just watch the price action just as if I'm trading stocks. And I happen to scalp on, or happen to execute trades on options. That's it. So I cheat, really. I cheat. Works for me. Well, am I missing any questions here? Mike will guide you. Thanks, Raf. Appreciate it. What time is the market opens at 6:30 these days? It used to open at 5:30, but after daylight savings, now it's 6:30 in the evening. Montage link to options. Yeah, same thing. Jay, it's the same thing. Options. Oh yeah, you guys wanted to see the option stuff, right? Let me show you how I do this. Very simple. Quotes and option chain. And this thing pops up. In here, you type in the ticker. Let's say I want Tesla. It's in. The whole option thing on Tesla just pops up. Let's get this cleaned up a little. So this is it, and I pick whatever I have calls on the right side and puts on the left. Oh, calls on the, oh my God. These are calls, these are puts. Okay, left and right. You got it. And that's it. Just click on it, and it pops up in the montage just like that. Boom, there, option charts. There, that's a call option. That's another put option. So once I've decided what direction I want to trade or my trading plan, I pull up this option chain and pop up the option. And then off the screen, I've got also, multiple screens. So I've got the 1 minute chart, 30-minute chart, all that stuff laid out on the ticker I want to watch. Pretty simple. So this is kind of how I have it set up. This is what I'm watching. Nothing too fancy. Helen, pivot points? Nope, I can't make sense of it. I recommend you talk to Thor about that. He's a genius with that stuff. I tried it. I read his book. I went through it, and I realized that guy's a lot smarter than I am. So too much effort for me. I can't figure it out. So please reach out to him. He knows his stuff. What am I missing here? Gone after GT. Emotionally, I'm gone. Yeah. After I've been trading, and I trade decently heavy size where it gets my heart rate up a little bit. So I'm not exactly in a good frame of mind to hold a conversation during the first 30 minutes of the open. So, but I'm always in and out of the chat room all day. Well, for me, it's all night. And you'll catch me. If you don't, then email, Instagram, Twitter, all that stuff. So pretty easy. Just tag me in the chat room, and if I'm there, I'll happily answer. Or you can message me as well in the chat room. So that's there as well. Oh crap! This went 2 hours, huh? Sorry, Raph, did I keep you up late? I forget time. I lose track of time. This is just too much fun. You guys are too much fun. Yeah, Andrew, glad you liked it, man. Sure, guys. Okay, Melinda. Max loss per day, number of... No, Melinda, I don't. My max loss nowadays, because I believe that 80% of my results come from the trader, not the trading, it's really up to my emotional state. If I'm no longer in a good state to trade, I have to walk away. And how do I know that? The moment I start thinking about picking up the microphone and smashing it on the screen, that's when I know I need to walk away. It's too much trading. That's my stop loss, to stop trading, go away. Nowadays, it's become that, but it's only become this now after blowing up accounts and doing all that stuff, and having mechanical stops, daily stops, all that stuff. So, yeah. What else? Yeah, sure, guys. You're more than welcome. Yeah, the KISS approach, the 80-20 approach, all that works. Glad you guys stuck around this long. It's amazing. I'm impressed. Thanks for hanging out. I could talk trading all day. So I'm always here. I can talk trading all day. If you want to talk more trading, reach out to me, email or Instagram or Twitter, whatever you like. And yeah, if you want to do some looking for a mentor, I'm there. You can ask me. We can see if we are a good fit to work together. I can offer to work with you. If you just want to hang out, if you're in Dubai, let me know. Good fun. I'm always in the chat room. I always put out my trading plans in the chat room and as well as on Twitter before the markets open, usually about 5 minutes before it opens. That's when I'm having conviction on the trade setup. And then I try and trade it. And I'm in the chat room, and if I don't respond to you right away in the chat room, it's probably because I'm managing like a 200 contract position. So give me a few minutes, get done with that, and then, happy to talk. So you guys done with DOS? Good? You're good? Okay, get out of the way. Here we go. Like your style resonates with you. Cool, man. Glad to hear, Joe. Thanks for hanging out tonight. I'm glad it works, it fits. And hey, it's a lot of fun. Like I said, trading offers you opportunities for time freedom and financial freedom. So if you get it right, as in not get it right, but once you find your way, find your consistency, it's amazing. We could go sit on the beach half the day. That's what I do. I don't do much else. Really, it's fun. Yeah, it's a lifestyle, right? That's right. You can engineer your life. That 4-hour work week book, it's kind of like that, really. day trading has, for me, it's provided that. You can live with so much freedom. It's great. I would never go back to the rat race ever again. I fly airplanes, but I'll do it for fun. And I'm not flying for an airline. No way. It's so boring. So just takes the romance away of flying. I like to go chase clouds, wear those goggles, scarf, open cockpit biplane, go fast. Just go have fun with it. I don't like to fly the airline 16 hours across continents. It's kind of boring. So that's day trading offers you all the options. You can do anything you want. Just find your way in this business.